This is ShadowQuant, Week Ahead, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Saturday, May 30, 2026, and this is the New York session. Now, let's get into it. Welcome to ShadowQuant's Week Ahead. The market is on edge, with a potential US-Iran deal on the table and the Fed's rate decision looming. The week could be a turning point. Let's check the last week's calls. I called a dovish Fed in the short term, which played out, but the yield curve flattening was more aggressive than I expected.
I said SPY could hold above 750, and it did, but QQQ's breakout was more aggressive.
I called Bitcoin to hold above 46,000, which it did, but I underestimated the altcoin rotation.
I warned of a VIX spike into earnings, but it stayed low, a missed call. But I think the market was too complacent.
I said the dollar would consolidate, and it did, but I didn't see the tech sector's strength coming.
Macro landscape, pulse the big picture. The Fed meets on Wednesday, and the market is pricing in a 25 basis point cut, but the yield curve is flattening at 0.46 percentage points, a warning sign. The U.S. economy is still growing at 1.62% annualized, and unemployment is at 4.3%, which is still low. The Fed is in a tough spot, they want to ease, but inflation is still above target. The ECB meets on Thursday, and the European Central Bank is likely to hold, but the rate outlook is still uncertain. The US dollar is holding, but we're watching the Fed's dot plot for more clarity. Thanks, Pulse, equities, grid, earnings, and indices.
We've got a packed earnings calendar this week, led by Microsoft, Apple, and Amazon, all reporting this week. Microsoft is expected to beat with $2.15 per share, and the stock is down 15% from its 52-week high. That's a big gap, but the market is expecting a solid quarter. Apple is expected to report $1.24 per share, and the stock is up 8% from its 52-week low. It's in a strong technical position. Amazon's earnings are expected to be strong, but the stock is still down 20% from its peak. Beyond the big names, there's also Tesla, Netflix, and Meta, all important for the tech sector.
That tech outperformance is a key macro signal. It's a sign that the market is betting on AI and tech-driven growth, even as the Fed is still hawkish. The sector rotation is a good sign, but we need to watch if it's sustainable.
And we need to watch the VIX. If earnings season is quiet, the VIX could stay low, but if there's a surprise, we could see a spike. The VIX is currently at 15.32, which is normal.
Currencies and commodities, SPECTER.
We're seeing a mixed picture in FX. The dollar is holding, but the euro is still under pressure. Euro-dollar is at 1.1661, with the 52-week high at 1.172. The euro is still facing pressure from the ECB's slow rate hikes and the weak European growth. The pound is at 1.3454, with the 52-week high at 1.35. It's close to key resistance. Dollar-yen is at 159.26, with the 52-week high at 160. The yen is still under pressure. The CFTC data shows that leveraged funds are strongly bearish on the yen, which is a big signal. Gold is at 4,543.87, with the 52-week high at 4,595. It's in a consolidation phase. The key is the dollar. If it weakens, gold could break higher.
And the dollar's movement is also influencing crypto. If the dollar strengthens, Bitcoin and Ethereum could face pressure. But if the dollar weakens, crypto could see a rally. We're also watching the Fear and Greed Index, which is at 54. It's in neutral territory, which is a sign that the market is not overly fearful.
Digital assets, CIPHER.
Bitcoin is at $47,300, with the 52-week high at $56,000. It's in a consolidation phase, but the on-chain data shows that stablecoin flows are still strong, which is a positive sign. Ethereum is at $2,750, with the 52-week high at $3,200. The Fear and Greed Index is at 54. It's in neutral territory, which is a sign that the market is not overly fearful.
But I'm still cautious. The dollar's strength is a headwind, and the geopolitical risk is still high. If the dollar strengthens or the deal is delayed, crypto could face pressure.
Let's bring it together. Apex cross-market themes.
Let's start with 3 themes. First, the Fed's rate decision is the biggest catalyst of the week. If the Fed signals a dovish bias, the dollar could weaken and equities could rally. But if the Fed is more hawkish, the dollar could strengthen and equities could struggle. Second, the US-Iran deal is a key geopolitical risk. If it's reached, the dollar could weaken and gold could rally. If not, the dollar could strengthen and the market could get nervous. Third, the tech sector's strength is a sign of confidence in AI and growth. But the energy sector's weakness is a warning sign of a slowdown in the real economy.
I think they'll be more dovish. The yield curve is flattening, and the economy is still growing, but not at a rate that justifies a rate hike. The Fed is in a tricky spot. They want to ease, but they don't want to risk inflation. I think they'll signal a 25 basis point cut, but not more than that.
I agree, the tech sector's strength is a good sign, but the energy sector's weakness is a red flag. The market is rotating into tech, but it's also showing some signs of fragility. The equities market is still vulnerable to a Fed policy surprise.
I'm not sure. The Fed could be more hawkish than expected, especially if they see inflation as still too high. The dollar could strengthen, and that could put pressure on equities and crypto. I think the market is underestimating the risk of a more hawkish stance.
But the dollar's strength is a headwind for crypto. If the dollar weakens, crypto could rally, but if the dollar strengthens, crypto could face pressure. The key is the Fed's rate decision. If it's dovish, crypto could get a boost.
So the consensus is that the Fed is leaning dovish, but there's still risk of a more hawkish stance. The dollar is under pressure, but it's still holding. The tech sector is strong, but the energy sector is weak. And crypto is in a consolidation phase, waiting for a catalyst.
Calls on the record, 1 each. I'm calling the Fed to cut rates by 25 basis points this week. My call, 2-year/10-year curve flatten further, target 0.42 percentage points by Friday.
I'm bullish on the S&P 500. My call, SPY bullish, target 760 by Friday.
I'm bullish on Bitcoin. My call, Bitcoin bullish, target $48,000 by Friday.
I'm bearish on the dollar. My call, DXY bearish, target 118.5 by Friday.
I'm bullish on the tech sector. My call, the technology sector bullish, target 185 by Friday.
If you're finding value in this analysis, support the project at patreon.com//ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Markets carry significant risk of loss. Always do your own research before making any investment or trading decisions. That wraps up this edition of ShadowQuant. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.